Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.29% today. It was a really interesting day. The actual market was up over 1% today for a little period of time after the announcement of a half a point rate cut. The half a point was a surprise to the market. The majority bet was still on a quarter point. So market reacted positively at first and then sold off. And I said yesterday, sometimes you just have so many people expecting kind of explosive rally to come off of a rate cut. Everybody's on one side of the trade. They run it up 1%. There's nobody left, and there's just sellers that are left to move the market after that. So nothing wrong with what's happening here. We're looking more long term. When they start to lower rates, the market does well. On average, the last 11 times, as I mentioned, it went up, 9 of those 11 over a 12-month period. So that's a good thing. They did say today, Chairman Powell talking about, the economy, they don't see any real weakness in the economy per se. They're just trying to bring, monetary policy back into a more neutral stance. I did say that they weren't expecting to have a lot of other big rate cuts. So, we'll see what happens. The market's always going to worry about, does the Fed see something that they don't? And so, they have, a lot of insight, a lot of numbers come in and such too. Are they seeing some weakness that the market isn't aware of? Personally, I don't think that's all that possible. I think the market tends to be more accurate than the Federal Reserve in a lot of ways. So, nonetheless, it's a pretty good deal altogether. Half a point gets things started. I think the half a point today had more to do with the fact that they probably look back and think they should have done a quarter point in July. And so they're just and maybe they would have done a quarter point in September, just trying to do catch up for what they should have done. I think the market would agree with that too, because you look at the minutes from the last meeting in July, there was a lot of talk about cutting rates even then. So this is probably just a makeup, and they'll continue to maybe do a quarter point on a measured basis. The market is looking at about a 1.5% total drop in Fed funds rate, which should be stimulative to the economy. Again, we're still in the soft landing zone. We still have good gross domestic product. Earnings are doing well. Employment is a little soft, although it got a little bit better with this last report, but not anything out of the ordinary as far as that goes altogether. So not a bad environment for the stock market. It got really close again to the all-time high and just couldn't hold it. So it's been knocking on that door quite a bit. Again, perhaps tomorrow, the calmer heads prevail and the money comes back in and starts to run as far as that goes. But don't be surprised if we don't see some weakness here for, a period of time. Again, we got seasonality, you got pre-election, and then you just had this pretty good run up actually, to recovery for the first week of loss this month. And so, we'll just continue to play this through. I do think this sets up for a good, trade for after the election, which isn't that far away. We're getting there. So I think the focus will start to move towards the election and, what's going to be impacted by different policy statements and those types of things. I always find it a little bit comical because, the market tries to parse, what somebody's saying on the campaign trail. But getting those things to actually happen, especially if they, need congressional approval, can be quite difficult. So, I think we have to kind of wait and see what's going to actually get through on these different, concepts that are being presented. So, nonetheless, we'll look forward to seeing you tomorrow, and we'll see how the market's doing then. Thank you very much.